Folks, welcome to the week ahead commentary. We had some technical issues, and I apologize. I actually thought I was live, and apparently was not. So we opened up. We spent a couple of minutes live, open, only to go limit down on the S&P 500. So, and I warned about this over the weekend. The daily chart of the S&P 500, the Dow Jones, all look very, very bearish. We lightened up on some of our positions. And we can you guys hear me? All right. All right. Now, gold did open up stronger, but at last look, it had given up those gains. All right, great. Hey, Kat. Sorry, everybody. I had technical issues. I thought I was live, but the stream never began. All right, so gold spiked up. We've pulled back. We've given up a lot of those gains. It's good to see that gold is rallying in the face of a limit down open on the S&P 500. So we'll come back. We'll take a look at gold. The dollar, relative to Friday's close, was down, but it was rallying at last look. We are now positive relative to Friday's close. No good. Now, what I was hoping for was that they would pass this legislation in Congress, and that would help dilute the dollar. But right now, it still looks like we have a liquidity squeeze going on here. And hey, Denny. And the market's going to continue to sell off. Let's take a look at some of these headlines here. Now, our governor here, Governor Cuomo, did a press conference, and this is only a blurb. 80% will get the virus, 9 months of crisis. I think he said 4 to 9 months, to be fair. But what we're seeing here is a bit of politics at play. And I'll point out to you that on Predicted, we have Joe Biden, Donald Trump at current are dead in a dead heat. Andrew Cuomo wasn't even on this list last week. Now he's on the list. So you can see what's going on here with his daily press conferences. So let's take these headlines with a grain of salt. I prefer to look at data. And the data I'm looking at, I'll go back to, I don't feel comfortable using Chinese numbers. I'm comfortable using South Korean numbers. The total case is 8,897. They're almost back to normal. In China, I don't believe their numbers. However, I will take a look at companies doing business in China, and this is as of February the 27th. Starbucks says 85% of stores now open. This is almost a month ago. Apple stores. This is as of March the 13th. Apple's China stores reopen after a month. So while this is bad, I'm not minimizing what is going on to the global economy, the domestic economy, not by any stretch of the imagination. I refuse to buy into these ridiculous headlines. I'm going to deal with fact. And the fact of the matter is that business is getting back to normal somewhat over in China. Nowhere near as normal as it should be, but you're seeing a light at the end of the tunnel. No, Pat, I had technical issues. Sorry about that. Technically, I came on late. I thought I was on. Uh, Sorry about that. The stream just didn't start. Yeah, we'll limit down, Sam. So this is the chart I warned about over the weekend, or one of the charts, the formation, I should say. Rounding top on RSI. And the market sent us a signal on Friday, folks. I'm gonna beg of you, please. Here, I'm gonna draw an analogy. Here's Lucy pulling the football away from Charlie Brown. We are Charlie Brown, right? We're the small investor. Lucy are the institutions. What they want to do, despite the fact that every single time that Lucy pins that ball up and sets it up for Charlie Brown to kick, she pulls it away because she gains his confidence. And every single time he falls on his back. That's exactly what happened on Friday morning. We woke up, bright green futures. Bottoms are not made of bright green futures in the morning. It just doesn't happen. You want bright red futures. Maybe tomorrow is going to be a short-term bottom. We're going to open limit down. What could be better than that? I'm trying to be optimistic. So on Friday, the market sent us a signal that we have stiff resistance on the Dow Jones at 20,500. It was support for one day last week. The rest of the week, it acted as resistance. Friday, we went negative like that. We closed at the lows of the day. We began lightening up again. Because I worried, and I went over this last night on the week ahead commentary, I was very worried about the open tomorrow morning given the price action. And knowing that bottoms are not made out of bright green futures. It doesn't happen that way. Now, Pelosi's holding up on the deal. Surprise, surprise. Yeah, I know. Typical. Can market go up overnight after locked or must? I think you have to wait until tomorrow morning. That doesn't mean that in the pre-market that you won't have the spiders trading, the exchange-traded funds, the IWM for the small caps. You could look at those to get a barometer of where we're going to open up. So while the futures may be limit down, we'll see the exchange-traded funds. And I'm going to do swing trading today, tomorrow morning, 6 a.m., 5 a.m. Eastern Standard Time. So, Nancy rocks. So we'll check the futures tomorrow morning. What I want to do is I want to talk about history for a moment. And I use history quite a bit when I do analysis of the market. The Emergency Economic Stabilization Act of 2008 included TARP. And that was right here. It was the same, actually, the beginning of October of 2008, they passed that. Lehman Brothers collapsed in September. And we had another 6 months after they passed TARP of selling in this market. So just because they come out and they put some ridiculous name on whatever they're going to call this package that's going to help the American worker when it's really bailing out the corporations, doesn't mean that the market is done going down. Maybe we're going to get a relief rally. We haven't had a back-to-back up day on the Dow Jones Industrial Average since here. No, that's wrong. Here. February the 6th. Think about that. What are the probabilities? So the probabilities are becoming more and more likely that very soon we're going to get a reversal day. We're going to get a rally. Do I believe that that's going to be the bottom? No way. I think that's going to be a technical rally. We're very oversold. Think about it. On a monthly basis, we have the Dow Jones Industrial Average, which is trading down. It's hard to see here in red. Trading down below the third standard deviation Bollinger Band, and I'll bet you that we're kissing the fourth standard deviation Bollinger Band. If we're not at current, we will by tomorrow morning. If Nancy doesn't act quickly, we're right there. We're leaning into the fourth standard deviation Bollinger Band on the Dow Jones Industrial Average on a monthly basis, folks. We are going to rally. There's no doubt about it. And it's probably going to be early this week. Do I think that's the bottom? No. No way. Now, taking a look at the chart of, this is a daily chart. What did I do with it? Here. I drew up this chart earlier to illustrate why you should not be buying the market right now on any rallies. Here. Here is Lehman Brothers collapse. That was September the 15th. Lehman collapsed. And we even had a counter trend rally only a couple of days later. Big rally, too. And then this is where the House passed TARP on the 3rd of October, 2008. The president signed it. What happened? The market continued down. So when they pass this legislation, and they will, they are going to pass this legislation. That does not mean the bottom is in, because historically, the history has taught us that the liquidity squeeze is far greater than any legislation. People need to get liquid. Institutions need to get liquid. And so they're going to continue selling until they're liquid or bankrupt, one of the two. Sell the pops, exactly right. And that's exactly what we're going to be doing. So we're looking for a short covering rally on the market. Then we'll be looking to lean into the short side. Is tomorrow going to be a reversal day? Is that a short-term bottom? Maybe. It has all the recipes to make for a short-term bottom. If I were Mnuchin and Powell, I would tell Congress, hey, listen, you missed the deadline here. The futures are open. We're limited down. Let the markets open up down tomorrow morning. Then come out. Make the announcement. Let there be a short covering rally. And then you'll see the markets probably rally for a couple of days. We'll look for an opportunity to get short yet again of the market. But I would not consider this to be a bottom by any stretch of the imagination. Again, remember, going back to the financial crisis, we had 6 months worth of selling after TARP was passed. So please, don't buy the bright green futures. I beg of you. I beg of you. All right, I'm going to do a member stock chart request tonight. I would love to take everyone's requests. I simply can't. I did put out a promotion for titanium level members. I can only have a limited amount. We're almost at that number. If you haven't taken advantage of it yet, please do so. It's a lot of work on my end. Normally, with the titanium level membership, I don't allow for chart requests because it is a lot of work. And I owe it to my gold members and silver members to provide them that service. But I want to help people. So if you're not a member and you want to use, I'm going to have to qualify people by using Super Chat or if you're a member. So members get first dibs. Super Chat, I'll stay on to. I responded to your last reply, Kat, on the thread from the best stock charts video. So go check that out. And you're always on here. So just send me your symbols. I don't want to leave you out in the cold. All right. So, hey Denny. No worries, Kat. No worries. It's there for you. All right. So that's the name of the game. Members, I have to take care of first. Super chat second. If I have time at the end of this hour, if you're out there and you're not a member, if you haven't used super chat, if I have time, I'll get to you. But I do need to do other things with members, so my apologies. Super chat is that $ below in the chat area. RL. All right, let's get to this. We'll come back to the futures before I sign off. Let's begin with Regeneron. All right, Regeneron. Monthly chart. We have a bearish reversal month so far. We did bounce off of support, but I'm worried about a break here to the downside. Let's drill down to a weekly view. Bearish key reversal week last week. We closed right at the lows of the week. If I were long, new weekly low, I would be lightening up. Daily chart. In all probability, we are going to break to a new low tomorrow morning. We have RSI putting in lower highs. We're rolling over on Stokes. Lots of topping action above. Lots of selling pressure on Friday. I would avoid these shares. I would raise stops. Let me go to Costco. Costco has held up well throughout this sell-off, but I don't think it's going to hold up much longer. When you take a look at the chart of Costco, you have a lot of topping action here at 314.14. And last week we reversed. We were higher. We reversed to close lower. Weekly view. We closed up on the week, but well off the highs of the week. And we have a ton of overhead supply here. I think that in all probability we're going to break to the downside. So a new weekly low would have me lightening up on Costco, and it could quite possibly become a short. Daily chart. We broke down below support on Friday. We did bounce off the lows of the day. I would have to say, folks, avoid these shares. Your RSI is rolling over. Stokes are rolling over. Momentum is being lost. I would have to say avoid, raise stops, and it could quite very well become a short on a break below this lower band of support. You have kind of have a bear flag setup, which is formed here. Not what you want to see. Very, very bearish stuff. Very bearish. So avoid possible short, raise stops on Costco. TDOC. We've had a very nice run. It's nice to say that we're overbought. I haven't been able to say that in a while. But we are leaning into the third standard deviation Bollinger Band. 2 consecutive months of topping action here. Weekly view. I tell you, one strong stock. Holding support here. We were lower at one point last week. We even put in a new weekly low, yet we reversed to close up. Very interesting. Let's check out a daily chart. Yeah. Lots of topping action on Friday. You know, I'm being very cautious right now with everything. Lower highs in RSI. It's still a very strong stock. If you're looking for stop loss points, 130 would be a good stop point. Another one, 120. And ultimately, if we were to take out the lows of last week, I would say you got to get out. But these are my stop points. And you could scale out. You know, if you start breaking down below 130, take a third off. Down below 120, take a third off. Down below 106, clear the decks, get out. Let's go to Baidu. All right, Baidu, you can't touch. Baidu is holding up fairly well. I shouldn't say that. It's lost over a third of its, half of its value. So no, it's been holding up in recent months on news. They tried to rally it. That rally so far this month has failed. We've broken support. We are going lower here. Weekly view. Let's overlay the monthly chart or the monthly support levels. So we bounced off of weekly support. I don't think it holds. I think it breaks, and at the bare minimum, we're coming down here. Wow, $67 a share. Daily chart. Yeah, this is just a dead cat bounce. What they did, they bounced it off of, let's get rid of this. They bounced it off of support. Now they're probably going to drop it yet again. Again, I'm going to stick with this price target of around $67 a share on Baidu before we see a real serious bounce. So I would avoid these shares. In all probability, they are going lower. CONN. Cones Inc. Cons Inc. Never heard of it. All right. Right off the bat, I don't like it at all. So far this month, we are down below critical support. We still have a few days to go in the month. Maybe it'll rally back and recapture support. But in this market environment, I wouldn't bet on it. Weekly view. We were down on the week last week. We closed off the lows of the week. One thing that's interesting is your Stokes are moving up higher. But that's not enough for me to buy it. It's just an observation. Daily chart. I think what you're seeing here is a dead cat bounce. Stokes look good. RSI is looking good. Higher lows, good stuff. But in this market environment, what I look for is you got to get away from the intraday charts. You got to get away from the daily charts. You got to take a look at the weekly charts and the monthly charts. Let's go back for a moment. When was the bottom clearly identified in 2008? Look at this monthly reversal bar. That was a signal by the market that, you know what, it's safe to go back in the water, begin buying here. Because if you take a look at a daily chart of that time frame, I want to bring up that other chart again because I can't hammer this home enough. It's not a matter of making money right now. That's not your primary concern. Your primary concern is preservation of capital. So look at all these head fakes. You had this beautiful up day here, September the 30th, 2008. What happened after that? Crushed. No follow through. It happened time and time again. 2 back-to-back beautiful up days. Right? We even broke out here on the 8th. What do we do on the 19th? We broke out on the 19th. On the 22nd, that following Monday, we broke down again. So it's the daily charts they're helpful in terms of short-term swing trades. That's it. For the macro view, you're going to have to rely upon your weekly and your monthly charts to identify whether or not we may have a bottom in. That's the discipline. That's the macro view. And this is why I don't day trade. I'm not good at it. I'm far too over analytical. You got it, Barun. All right, let's get back to the chart requests. All right. So cones are left off there. I would avoid these shares. I see no reason to go buying them right now. All you're getting right now is a lift up, dead cat bounce. They're probably going to roll back over again. BTU, Peabody. It's trading like the other utilities, not doing well. We're right off the lows of the month so far. Weekly view. We were up last week, but we reversed at resistance, no breakout. So looking at the weekly chart, looking at the monthly chart, I see no indication whatsoever that these shares, that this bear market in BTU or any other name that have been bearish on so far tonight is over. As far as I'm concerned, it's going to be a slow drift lower until ultimately we get capitulation. Now, I want to bring up something, and I'm sorry to be all over the place, but I have so many things going through my head. I want to point out something, a comparison to where we're at current. I mentioned this earlier, that we're trading down below the third standard deviation Bollinger Band on a monthly basis. We did the same back during the financial crisis, but we only closed barely down below it once. That was October of 2008. In all cases, we rallied well off the lows of the month. I think that's going to happen here as well. But just as we rallied off the lows of the month back then, that was not the bottom. So whatever rally we get here does not mean that it is the bottom. That's the point I'm trying to drive home. We're oversold. We're probably going to rally, but it is not going to be the bottom. BTU, back to BTU. It's not done going down. Daily chart. It did manage to recapture support level, but this is not the washout. I need to see a washout. I wouldn't short it. I wouldn't buy it. If you're looking for a stop at this point, if we break down below, let's say the lows of the 18th, which was that's it's way too far away of a stop. I would stop out on a break to a new daily low. The low of the day on Friday was 3.09. We break down below that level, I get out. I wouldn't add more here either. All right, Baroon. GSX. All right, we'll begin with the monthly as usual. We're stalling out here, no new monthly high. We're down on the month. It's holding up well. We're off the lows of the month. But the fact that we have stopped going up gets my antenna up. Weekly chart. A healthy chart. We could be bull flagging out here. If we break out above the highs of last week and we appear ready to close there by this time, by Friday of the next week, I should say, not this time, I would look to add more to the position. But this is a weekly chart, so you're going to want to make sure that any rally above this resistance level by next Friday hasn't faded. So I would wait until next Friday to open up a new position or add to my existing. Daily chart is not looking so good. We limped up off the lows of the week, but on Friday we flashed an outside reversal day. That is not good. I would raise stops here. If you want to keep it tight, right below the lows of Friday, 39.06, we break below that, get out. There's going to be plenty of opportunities to get back in. All right, Eric, you brought up the gold-silver ratio. I want to talk about that. NUGT. We actually took some of this off the table on Friday. I'm just going to go with the daily chart here. We broke down below support. It's been trading along with the S&P 500. The S&P 500 I felt was going to break to a new low this week. Therefore, if it's trading with the S&P 500 and I believe that it was going to break to a new low, then I had to lighten up a little bit on the NUGT trade. So right now, I remain somewhat bearish going into the new week. The dollar is very strong this evening. That could change by tomorrow morning. Let's see if gold is doing anything different than what it was before. It was up. It's given up a lot of its gains. We've broken it back down below support. So I don't have a lot of hope for the miners this week. I wish I could have more optimistic comments. I don't. They'll recover. But the dollar has to break. The dollar has to break. And once the dollar breaks, then you're going to see gold and the miners rip. Not right now. In fact, this is a chart I shared with members over the weekend. And this is what has me up at night. This is a quarterly chart of the US dollar. We are at the highs of October of 2016. We are on the verge of we are breaking out. We have broken out of a massive triangle formation at the 100 mark. If we close out this month above 100 on the Dixie, in all probability, the dollar is going to head higher. So this is what keeps me up at night. If you're wondering what keeps me up at night, this is the chart. So be careful. The price of gold is holding up well, but it's not holding up that well. So let's be careful here. Liquidity right now, the damage that's been done, none of us could really appreciate the damage that's been done to this economy right now. So the flight to safety is, believe it or not, perceived to be the U.S. dollar, gold to a lesser extent. But beware. Beware of a breakout in the U.S. dollar. Let's see. Hey, blockchain. How you doing, brother? Long time. The spiders. We kind of already covered that. Let's go to... I did a video called Best Stock Charts on Saturday, and I laid out my price targets. So on a monthly basis, the best probable outcome for the month is that we rally to close back above 2346 on the S&P 500. If we fail to do so, which we probably will, we will pull back here to 21,034. That would be a 37% correction. I think ultimately, after we have counter trend rallies, ultimately we're coming down here. To around the 1800 mark on the S&P 500. So over the course of the next several months, a lot of selling to go. So check out that video I did. I compared the chart of the S&P 500 relative to the oil embargo, bear market, the dot-com bear market, and the financial crisis bear market. The average of those three bear markets, it was a 54% correction on the S&P 500. I think that's a minimum of where we're heading. So a lot more downside to come here. That doesn't mean that there can't be money made here, folks. I want to draw that home. There's going to be opportunities to swing trade to the long side and then get short of those rallies. There's going to be a lot of money to be made. But right now, it's just a waiting game, and we're waiting for that first counter-trend rally. And once we get that, the game plan is to do this. Take our crayon out. And draw wherever that line is. Wherever we rally up to. Let's pretend that this is the line. Right now it is our first price target. If we rally, we could rally all the way up to, assuming that we rally next week, we could have a rally all the way up to 2650 on the S&P 500. Don't be shocked by it. What happens is that people believe that they're in a new bull market because it's so ruthless. They say that this has to be the bottom. It's not. It's just a ruthless counter-trend rally. It's a rip your face off, short covering rally. And it will roll over. All right, that's the spiders. You're welcome, Barun. Senate vote fails to move ahead with oh my God. They did this back in 2008. Oh my God. Let's check out gold. Can't gain any traction. Let's check out the dollar. Probably because the dollar's surging right now. No, not really. Not really. Interesting. I'm going to keep an eye on the dollar. I would have expected the dollar to surge. Let's watch on a 4-hour basis whether or not we manage to close above this upper band of resistance on gold. If we do, we may see a rally on gold into the morning. We have higher lows on RSI, 4-hour basis. Picking up steam here now. We need to close above this green line here on a 4-hour basis. Forget about a 5-minute chart. Buyers are moving in now. Volume is not great. Let's go back to the dollar really quick. It's beginning to weaken up slightly here. We're still positive on the session. All right. Yeah, I heard Merkel, yeah. And you have Rand Paul now. God bless. Poor Rand Paul. Cat Apple. Notice a gap on the weekly at 115. We'll take a look at that. Mr. D. Colton, how you been, man? Do you see anything to buy for a long-term investment? No. No. And I'm adding in there. Normally, you know me to be very, very bullish on gold. I am bullish on gold. I know with all my heart that gold in the coming months is going to rally like a son of a gun. But I'm concerned about the monthly charts and how we're poised to close out. I'll check that out, Cap. So nothing right now that gets me excited. But we were buying. We were buying silver last week. You know, we're nibbling. Oh, and talking about that gold-silver ratio, I want to bring up something. You know, I reference it quite a bit myself. All right, so here's the gold-silver ratio. It's at 119. This time last week, I think it was at 122. Now, we need to keep in mind something, that two things can happen, right? We can have silver rally. That would narrow the gap between the gold-silver ratio, or gold could correct. And silver need not go down that much. Now, what concerns me about gold is that this is the second consecutive bearish key reversal month in a row. It concerns me. And the only reason why I'm being so vocal about it is because I'm looking at a dollar on a quarterly basis that is breaking out. and they trade inversely of each other, traditionally. Recently, they've traded in tandem, but that's not going to last. Ultimately, they will revert to the inverse correlation. So gold could correct, silver not correct as much, because it already has corrected quite a bit, and that gold-silver ratio could close without silver ripping up higher. So let's just keep an open mind about that gold-silver ratio. I'm seeing a lot of videos on YouTube about silver, how cheap it is, and I get that there's scarcity of physical silver for delivery. I get that. But right now, with the liquidity squeeze, I worry about the paper markets overwhelming the physical market, the spot market. It's down now? Yeah, we need to see a big drop in the dollar because we have the month and the quarter coming to a close very, very soon. And we need the dollar to close down below this mark right here. That's a big drop in a short amount of time. Given this crazy circumstances, it could happen. But here's the line in the sand. We need to close below 100 on the Dixie. Euro US dollar has potential? I don't know. I would think the yen has a greater potential. Let's take a look at it. Excuse me. Excuse me, folks. Sorry about that. Here's the euro. It's looking okay. This is a 30-minute chart. Let's go to a 4-hour chart. It's holding critical support. It's down on this 4-hour bar, but it's up on the session. We'll keep an eye on it, but right now it's struggling to hold on to support. What I think might do better is the Japanese yen. Maybe not. I haven't taken a look at this. It broke support. Let's check out the Swiss franc. The Swiss franc is ripping. Ripping. Now, you need to take this into consideration that the Swiss are getting hit very, very hard by the coronavirus. They have total cases per 1 million of population, 864. That's just behind Italy. So, and their currency is ripping. Oh, Jesus, look at this poor Luxembourg. So the Swiss franc looking good here. Let's go back to the dollar. Still looking good on a 4-hour basis. Still up on the session. It's holding. Let's go to gold. And then we'll take cat. We'll go to Apple for you. All right, here's that. I'll revisit this prior to signing off tonight. Let's go to Apple. Excuse me, folks. Uh, now, okay. So, Kat, you were saying peak at Apple. Notice a gap on the weekly at 115. Let's go to the weekly. Because we don't have a gap on a monthly chart. Oh, you're talking about the filling of a gap, I guess. $115, Cat? Can you clarify that a little bit? Oh, thank you. Oh, gap in October of 17, I believe. Yeah, we had a gap up. Yeah, it was a breakout. Nice consolidation, and then it broke out. I don't know whether or not we're going to come back down to fill that gap. I think that what we're going to probably do, I think that what you're seeing set up right now with the president's statements is a economic war with the Chinese. He's looking for reparations. And that's not going to bode well for U.S. companies seeking access there. So I think that we are headed down to about 190 per share. So around $39 away. And if that breaks, we're coming down here to 139. Ultimately, that's probably where we're going to land. Let's go to a weekly chart. Yeah. Bearish reversal bar last week. Both lines on Stokes down below the 50 mark. Why I say this is that when you see that rallies tend to fade. When you have both lines on Stokes declining down below 50, rallies tend to fade. So don't get lured into those intra-week rallies. You'll be up on Monday, Tuesday, Wednesday, Thursday. You're feeling all giddy. We're going to close out the week up, and all of a sudden on Friday, hammered. And they kill you. So don't get lured in. It's going lower. Rounding top. Every rally is being sold. I would avoid these shares like the plague. Wish I had better news. And again, my price target, initial one anyway, is around 190 per share. Looking for. Oh, you're. That's right. You're short. That's right. You told me that. You're looking for a price to cover or to add more. If you're looking to add more, I think the only fly in the ointment is this legislation. We may get a short covering rally. So I wouldn't lean into the short side until that legislation was passed, because you may get a pop. On that pop, though, I would lean into the short side then. 220 puts. What expiration? What month did they expire, Cat? William, Gilead. I like the short side on Apple. Just beware of that legislation. That's all I'm saying, Kat. You might get a short covering rally. If you have longer term options going out a few months, I wouldn't worry about it too much. April, that's getting pretty close. Your time decay is beginning to ramp up there. Okay. Let's go to Gilead. Gilead has held up fairly well. Very, very strong monthly support here. Here's the problem. They rallied it last week. What was there? News about them possibly having a drug? Maybe that didn't pan out. Maybe sell and buy more time. If you have a profit, Cat, now's the time. Remember the environment that we're in, right? More than likely, they're gonna open the market down tomorrow morning, but on a monthly basis, on a weekly basis, we're very, very oversold on the market. Apple's a marquee name. Even though it looks very, very bearish, you're going to have amateur money chasing Apple as quickly as possible if they see a market rally. So I would be, if they gap the market down tomorrow, that's a great opportunity to book some profits there. Let the shares rally, then open up a new round of contracts going out into June or whatever, and buy yourself some time. But I would just wait for that rally to fade. That's all. Oh, they're being discussed on 60 Minutes. All right, so was that last week or is that tonight? Because it surged last week and it closed off the highs of the week. And I'm noticing here possible head and shoulders setup on Stokes. Thanks, Will. Oh, really? Okay. That makes sense. All right, so possible head and shoulders setup on Stokes. If they have a drug here and they're part of the solution, then these support levels may just hold. But if we break to a new weekly low, then the market's sending you signals. So I would use a stop right below 67.24. Would I buy them here? Probably not, because we did close down below a support level. One weekly support level, held another. Daily chart. They sold strength on Thursday. Friday, pulled back yet again. I would be careful here. Maybe not sell, but raise stops. Tonight? Okay, thanks, RL. Let's go to an intraday chart. One thing to do is this. Just simply take a crayon out. $72 per share support. There's your upper band of resistance. We managed to break out above this upper band of resistance. You could look to add more. If we break down below support, weekly support, lighten up. All right. IBM for Pat. I don't like the 4-hour chart. All right. Oh, man. IBM's not looking good. So we have, 7 trading days left to go in the month? We're trading down below critical support at 110 per share. Stokes are weakening up. RSI is very weak. If we break to a new monthly low, next month we're coming down here to 75.26. Weekly view, not a good week last week. And this is what happens. They rallied it early on. People buy it. By the end of the week, it's negative. And this is what destroys portfolios. So I would raise stops. I would avoid new weekly low. I would lighten up. You know, one thing to look at as well, and I'll go to let's go IBM monthly view. Where are my Bollinger Bands? Yeah, Pat. I think the next stop for IBM is at around 89.50 per share if we break to a new weekly low. I'd be very, very careful here. All right, floor. Series breakdown last month, a continuation breakdown this month. It's trading with the market. The one positive that I could say about floor, last week we did rally off the lows of the week. They couldn't turn it positive by Friday. So that leads me to believe the path of least resistance is going to remain down. Daily chart. So it did break out. On Thursday, retested on Friday. Would I buy it here? Probably not. If I were long, I probably wouldn't sell it. I would just raise a stop to below last week's lows at 285. But it broke out last week. It's got to be acknowledged. Let's go to an intraday chart. Nice bounce. I would check the valuation on it. See how expensive it is historically. Maybe it's just undervalued right now and they just stop selling it. RL, ZM. Zoom should be doing good. All right, not much data here. Obviously bucking the trend. Beautiful price action here. Zoom is benefiting from the video conferencing arena. Looks pretty good. I wouldn't sell it. It's a little bit extended relative to its third standard deviation Bollinger Band, but the same driver that's forcing this market down is also helping pump Zoom up. So it may stay aloft here for a while longer. So if you're looking for a stop, we break this lower band of support. Let's say around 122, around there. Stop out, book your profits. Just on a daily view, the raindrop charts. Saw a lot of selling into the close on Friday. Just a word of caution. Four-hour chart, same deal here. Just be careful. If you have profits, I would hate to see you lose them. TDOC, I already went over TDOC. Would it be wise to sell 190 Apple puts tomorrow at the open? So you're going to sell, you're going to write puts at the 190 strike. I think that you would get a better premium for them at some point in time in the future. I don't think you get enough premium, and you're going to. I don't know if you're on margin or not, but the cost, if Apple continues down, the cost to maintain that position is going to eat away your buying power. So, me personally, I think that it's too far out of the money right now, and it's got a long way to go to get down there, and it's going to tie up your capital. You know, if you're going to stay really short term, like using a weekly, then fine. You know, I don't know how much premium you're going to get for them, but that's fine. They're probably not going to see 190 this week, and they'll expire worthless. XLU. I was very disappointed in the utilities last week. I guess I would feel a lot worse if I bought up here. You know, at least we bought down here. But we're at support on the XLU. And depending upon that legislation, which they're probably going to pass tomorrow morning, I think what they're setting up for, folks, is a big sell-off tomorrow morning. They'll pass the legislation. We'll probably get a rally back, and that rally may last a couple of days. That's the feeling I'm getting. So monthly view, not looking good. At support. Weekly view, bearish key reversal bar at support. There's a good chance we break to lower lows if the S&P breaks to lower lows. Daily chart closed at the lows of the day on Friday. Let's go to a daily chart. I think that we're probably going to see a little bit more weakness here, but we're going to get a nice rally in the utilities. We're at closing support going back to 2018. We closed just shy of it. For an extreme oversold support level, I would look at 45.66. But I think that's going to hold, and then we're going to rally. Does that rally hold? I don't know. Probably not. I guess I don't have, let's go to a 4-hour chart. Where are my Bollingers? God damn it. Probably going to leave off with this one, folks, because I'm starting to fade. All right, so this is a 4-hour chart. Ugly as hell. But it's so ugly, we're going to rally soon. It's always darkest before the dawn. So they'll probably gap them down tomorrow morning, and ultimately we're probably going to get a reversal bar, and we'll get a rally some point in time this week on pretty much everything. Before I shut down, but I wouldn't go buying here. I wouldn't go buying any more utilities. I wouldn't go buying anything right now. Not until we get a reversal day. All right, gold hasn't made much headway. Well said. Pray for our families, USA, and our president, yes, and all our friends overseas as well. We'll leave off with the dollar. It's negative, but it's still holding up. All right, folks. I want to thank everybody. If I can ask you to hit that like button, I'd really appreciate it. And subscribe to the channel. It helps support the channel. And everybody have a great night. I'll talk to you tomorrow on Swing Trading Today, 5 a.m. Eastern Standard Time. See you then.